Good evening. We are currently navigating a polycrisis of unprecedented complexity, a convergence of kinetic geopolitical friction, a structural transformation in the technology sector, and a violent deleveraging of the digital asset markets. In the last 24 hours, the narrative that Bitcoin serves as digital gold has faced its most brutal reality check since its inception. As kinetic tensions escalate over the sovereignty of Greenland, physical gold has surged to historic highs, while Bitcoin has behaved like a high beta tech stock, plunging to 15-month lows. Today's deep dive is not just about a price drop, it is about the SaaS apocalypse, the moment generative AI began to cannibalize the software industry, and how that technological shift has drained the liquidity that previously fueled the crypto supercycle. We will also stress test the MicroStrategy model, which is currently sitting on billions in unrealized losses, and look at why XRP might be the only asset finding a floor in the agentic economy. The Bitcoin boomer adoption trade may be wounded, but the utility phase is just beginning. Watch the US CPI data on February 11. It will dictate if the Fed turns hawkish again, which could be the final capitulation signal for this cycle. If you value data over hype, like, share, and subscribe to this channel. We provide the hidden connections the mainstream media misses. Join our community for daily deep dives into the future of the global economy. Let's start with the why. Markets hate uncertainty, and we are currently at the brink of a transatlantic fracture. The Greenland crisis. Since late 2025, the second Trump administration has intensified its bid to acquire Greenland from Denmark, citing the island's strategic dominance over Arctic shipping lanes and its massive reserves of critical minerals. What began as a diplomatic ask escalated into Operation Arctic Endurance, where a coalition of 11 European nations, including France, Germany, and the UK, deployed military personnel to Greenland as a tripwire force. The Davos Framework. On January 21st at the World Economic Forum, a temporary de-escalation occurred. President Trump and NATO Secretary General Mark Rutte announced the framework of a future deal, the Golden Dome. This deal reportedly involves a massive U.S.-funded missile defense system on Greenland and exclusive U.S. access to rare earth minerals, currently a Chinese monopoly. The tariff threat. While the 10% tariff scheduled for February 1 was suspended, the 25% quote escalator remains a threat for June 1 if a final deal isn't reached. The market divergence. Here is the critical data point for crypto investors. In the face of this potential NATO fracture, gold hit a record $5,594 per ounce. Bitcoin, meanwhile, fell nearly 11% to $67,000. The correlation between Bitcoin and the Nasdaq has reached 0.80, the highest in 4 years. Bitcoin is not behaving like a safe haven, it is behaving like a tech stock on leverage. If geopolitics provided the spark, the SaaS apocalypse provided the fuel. On February 5th, Anthropic released Claude Opus 4.6, and it has fundamentally broken the business model of the software as a service SaaS industry. The agent teams disruption. Opus 4.6 introduced a feature called Agent Teams, allowing the AI to spawn multiple sub-agents to handle legal, financial, and coding tasks autonomously. The result: investors realize that if an AI agent can perform the work of 10 junior analysts, an enterprise no longer needs 10 Salesforce or ServiceNow licenses. The carnage. ServiceNow, NOW, fell 7.60%. Salesforce, CRM, dropped 4.76%, and Thomson Reuters crashed 16% as AI-driven legal tools automated contract reviews. Why this crushed Bitcoin? The technology sector lost over $1.1 trillion in market cap this week. Because the Bitcoin boomer adoption trade via ETFs has tied crypto to the Nasdaq, The massive exit from tech stocks forced a simultaneous exit from digital assets. As the AI honeymoon ends and investors demand productivity over potential, the speculative liquidity that sustained Bitcoin above $100,000 has simply evaporated. We must now look at the systemic risk posed by the world's largest corporate Bitcoin holder, Strategy Inc., formerly MicroStrategy. The underwater treasury. Strategy currently holds 713,502 BTC. Their average cost basis is $76,052 per coin. With Bitcoin trading in the $67,000 to $70,000 range, the company is underwater on its investment by over $3.5 billion. The MNAV trap. The key metric we track is the MNAV, market to net asset value. For years, Strategy traded at a 2.0x premium, allowing them to sell expensive stock to buy cheap Bitcoin, what Michael Saylor called the infinite money glitch. Today, that MNAV has collapsed to 1.24. Liquidation fears. CEO Phong Le has admitted that if the MNAV drops below 1.0, a Bitcoin sale might become a last resort. The debt buffer. To prevent this, the company established a $2.25 billion USD reserve to cover interest and dividend payments for the next 30 months. Maturity dates. While there are no immediate liquidation triggers in 2026, the first major put right for bondholders occurs on June 1, 2028. If Bitcoin is not above $91,502 by then, the company faces a genuine liquidity crisis. The Fed factor. Compounding this is the Fed. On January 28, they held rates steady at 3.5% to 3.75%, pausing the cutting cycle. Atlanta Fed President Raphael Bostic stated that inflation remains stuck in the high 2s to low 3s, requiring a restrictive stance. Until the labor market truly cracks, the Fed will not provide the liquidity bailout that crypto bulls are praying for. We must now look at the systemic risk posed by the world's largest corporate Bitcoin holder, Strategy Inc., formerly MicroStrategy. While the risk-on narrative is dying, the utility narrative is evolving. Ethereum struggle. Ethereum has dropped to $2,068, a level not seen since May 2025. The bear case is clear. Layer 2s are cannibalizing mainnet revenue, making ETH inflationary. The catalyst. Watch for the Glamsterdam upgrade in mid-2026. This will introduce Verkle trees and stateless clients, allowing users to run nodes on mobile phones. This is the decentralization endgame that could reattract institutional DeFi. XRP and the agentic economy. Surprisingly, XRP is showing the most relative strength. Following its August 2025 settlement, Ripple has moved into the enterprise banking space. RLUSD. Ripple's USD stablecoin supply has exploded to $550 million in just 7 months. AI integration. Coinbase has launched Payments MCP, which allows AI models like Claude and Gemini to natively access crypto wallets. Because AI agents cannot open traditional bank accounts, they are using stablecoins on chains like XRPL and Base to pay for compute and data in real time. This is the fundamental demand floor that will survive the crash. Let's talk numbers. This is the James Rodrik outlook for the remainder of 2026. 1. Bitcoin, BTC, price prediction 2026. Short term, we are targeting a capitulation wick down to $52,000, which aligns with the 100% Fibonacci extension from the current trend. Year end, if the labor market weakens and forces a June Fed cut, we see a recovery to $85,000. The era of $120,000 Bitcoin is likely on hold until 2027. 2. Ethereum, ETH, price prediction 2026. Target, $3,200. ETH will lag Bitcoin until the Glamsterdam upgrade proves it can maintain its status as the world's settlement layer without being bled dry by its own layer 2 networks. 3. XRP price prediction 2026. Target $3.50 to $4. We believe XRP will decouple as it becomes the primary bridge for the agentic economy and moves toward a potential IPO. Its utility will override the broader crypto winter sentiment. The Rodrik Action Plan. Watch the debt. If Strategy's MNAV hits 1.0, expect a massive flush in the market. That will be the generational bottom. Gold versus BTC. In the current geopolitical climate, gold is your shield. Bitcoin is your sword. Use your shield until the June 1 tariff deadline passes. Monitor CPI. February 11 is the next major volatility event. A hot inflation print will send BTC below $60,000 instantly. If you want data-driven strategies that connect the dots between the Arctic and your digital wallet, like, share, and subscribe. I am James Rodrik, reporting on the front line of the new global economy. Stay sharp.